in prices. There wasn't that usual surge in prices, and therefore we ended up with this retest of the bottom edge, which, interestingly enough, we tweeted out. So care for a bottom line retest. We got the bottom line retest. The 58 was a dealer's key. We got long off the 59, the 58s, and we ended up with a monster buy trade for 50 points or $2,500 profit per contract. So that worked out rather well. Thank you very much. We chatted about this one in detail, as I mentioned earlier. We've been busy on oil. We had a trade from the tweets last night as well on oil, didn't we? So if you were an oil trader, you'll be quite happy with the outcome. We said sell side only, top line. And there's the oil trade from the tweets at 1 o'clock last night, 1 a.m. this morning. And you can see that there's a heavy supply flip on the swaps, 37 cents down to just 28 cents. IBEs are sell side. Oil top lines are vulnerable and may provide some clean shorting ops. Concern is the elevated yield, so look for clues to a duration buying opportunity. So we got a top line sell on bonds here at the 90s. We traded down to a beautiful swing low at the 10s. It was worth $700, $800 this morning. Sell side swaps quite clearly visible, and a very, very, very nice trade as well. Another massive winner for anybody that can read and execute at the same time, which is a great trade for us and a great trade for everybody. Gold, we worked sell side into the numbers there. We've had a reasonable response to that. We talked about this one. We dissected this one in the room as well. And it's played out the way we were hoping it would play out. We've seen a very, very nice move. You can see, obviously, with a target price of 50. Remember, we told you that. There is a bit of buy-side value at 50. And sure enough, a brilliant and easy money opportunity to close out your trade as we broke the 50s here. And now we did say that would probably be a final exit price for us, just as well we told you that, because you might not have known it on your own. Hopefully you did. But if you didn't, at least you got that opportunity to exit your 50s, possibly even take a cheeky buy trade on the bounce off the 50 for a profit of 400 on the bounce. A very, very nice buy trade reversal for anybody that decided they wanted to do some new positions at 1 o'clock. It's a great outcome, isn't it? That is a great outcome. And look, we've got a nice little pop on the value, nice diverging into the bottom edge, big volume arrivals, obviously. It's the cash open, of course, and a very, very nice pop. If you took the 49 long, 54 traded, $500, you're only in the market for 5-10 minutes, and you've already picked up $500 for the US starting point. What a brilliant bit of business, guys. Crazy, crazy, crazy good. And let's see what the afternoon holds for gold. It's been a great morning. We've been buy side and sell side. We've managed to pick up a beautiful long trade with brilliant buy side value divergence here. Took a run at it. We got a beautiful shot at it. We got 42 longs up to a high price of 57s, 58s, $1,500 without even really blinking on the way up. Really no trouble with this trade at all. And the only trade we've had trouble with was this short sell that we took in this phase here that resulted in a week's handed sell, which pushed and pushed and pushed and pushed. And at 11 o'clock in the morning, you're normally expecting to be pushed and pushed and pushed and pushed because of the very, very low liquidity conditions. It's far easier for the dealers to just keep you on the back foot and let the price go higher, and you just have to be good enough to be profitable during that period, taking a sharp short sell and then taking your monies at the capper price, taking another short sell. Take your monies, and if it breaks, at least you're in it. If it doesn't, you scratch out and you go again at a higher price. We drew in the angle before the last sell came in, so if anybody was in the room this morning, you saw us drawing the angle. We says we're going to let this trade become an angle, on the angle sell trade. And from that on the angle sell trade, we went from 58 longs to 48, and that was another $1,000 sell side swing with almost no value in it either, which is obviously very good. And that's where we've been at. So let's get through the numbers today. We've seen the smart money, the leveraged funds money, slightly on the bullish side for the last 2 or 3 hours. Slightly on the bullish side. They have paired some of those long positions in the last rally into this top edge here. You can see the dealers have decided to join in with that and sold to the buyers at these prices. But the longs, the smart money, the leveraged funds, they've sold some of their long positions into this rally here at the 588s on the Nasdaq and into the 600 break on the S&P. So they've been selling to these buyers, to take profits, not necessarily to get short, but certainly to take profits. And they may still be keen to buy on dips. We'll wait to see if that's a thing. Let's get through the numbers. So in terms of the numbers, we have had important numbers out this morning, and they are important numbers because to be understanding the numbers, you have to recognize the concept of revisions as well. And when we look at the revisions, this helps us to make a better decision. A lot of people focus on the headlines and they don't pay any attention to the revisions on this narrative, right? And that's always going to be a terrible mistake for some people if there is a big difference of opinion. So the headlines come out on these inflation numbers, right? The headlines come out on the inflation numbers and they're all cold. So because these inflation numbers come out all cold, your first gut feel is long bonds. We were already long bonds, so the spike gave us a very, very nice profit on that cold inflation number. However, one of the things you'll probably notice is if you drift across to the right-hand edge, is you'll start noticing these sizable upside revisions on prior. Sizable upside revisions on prior. So in other words, whilst there's a spike to the top side on bonds here, there's going to be a reversal trade coming in from these revisions. It's the classic booby trade where we get the bullish initial push on bonds because of the colder inflation numbers, but we get the bearish response because of those revision numbers. And obviously that's exactly how the bond traded, wasn't it? So we were already long bonds when the numbers came out. We were already playing on that side of the book. We already took advantage of that. But look at what happened to bonds here. So we took advantage of the buy on bonds. We got this big arrival of volume, brilliant trade. It looked fabulous when the data first came out. And then the price spiked. And as soon as I seen the price spiking, I was aware of those heavyweight revisions. And if I'm aware of those heavyweight revisions, I'm taking my monies, guys. I'm not going to hang around. I think this is going to go bearish at this point, at these higher prices. And sure enough, if you closed out your positions and you got into a short, that would be brilliant. If you just closed out your positions, that's brilliant as well. We didn't get short. I didn't get short. I just closed out my long positions and said, thank you very much. And then we had a conversation in the room about the revision numbers, this idea of the boobies. And we love when we see these because very simply, it gives you an opportunity to play. Very much the case that when you see a booby or a bee-boo, you've got a chance to get involved because you're always going to be looking for a change to the spike. And if you're looking for a change to the spike, if you're fast enough to get the change to the spike, you can take your shot on the bear part of this trade or the boo part if it's a bee-boo, right? So in this case, we're trying to get part of the bear trade. Now, it dropped too quickly for me. I mean, we couldn't get any size on that, and I'm not willing at this stage here to start selling at 12s. That seems to me to be a real dumbass trade, right? So obviously the trade peels off, and obviously we end up at a bottom edge. We come back up to retest the high price at 16s. The value starts diverging on the sell side. So if you liked it at that stage, I'm sure you could have taken another short at that point. And looking at the value, it's a little bit disappointing that it perhaps hasn't traded 121.04s yet, but obviously that might be something that's in the offing for this afternoon, and we'll see if any value builds to buy back into this. Looking at it from a duration point of view, you can obviously take a view of this, and this duration is very bearish, isn't it? Duration is very bearish. Sell side only top edges off the 16s. It's done okay. We've already got a bit of profit out of that at 6s and 7s. 10 ticks. Worst case scenario, we scratch out at 16s. But I can't be bullish, obviously. I cannot be bullish when duration is selling like this. I am looking to wipe the bottom edge at 121s. I'm looking to take 121 offered. And if we are successful, of course, that's going to lead to a reasonable $500 profit. And that's without selling the spike. If we'd sold the spike, we would have been scratching it out at 16s anyway when it price pops back up, wouldn't we? But obviously the retest was very good for a short sell at 16s. Loved the trade, loved the idea. And as I said, we were aiming for a probable bottom edge at between 4 and 0. And obviously we're seeing if it happens. If it doesn't, as I said, we can easily scratch out with this with a small cheeky profit intact. So nice trade. This afternoon in terms of data, you'll see that there is absolutely nothing unless you're a gas number trader, and obviously that gas number coming out this afternoon, expected a 54 draw. against the prior of 80, and the let's see what it gives us. Forecast at minus 54. But that's for gas. If you do trade gas, of course, this is the important inventory number. This afternoon, we do have the 30-year bond auction. The bond auction yesterday with the 10-year treasuries actually was relatively decent. I mean, I don't know if anybody saw it, but we had a relatively decent outcome from the 10-year. In my opinion. And, obviously we got a bit of buy side action from that. The duration seemed to improve from that trade, and it took us up into a nice price from the bottom edges at 21.20s, traded 22.04s this morning. And if you traded that positive stop through number from the bond auction, you did okay with it, didn't you? You did okay with it. But the 30-year finishes off, and we do have a bigger concession today for the 30-year, of course, at the moment. And if yesterday's 10 had a stop through, we would imagine that today's 30 will possibly have a stop through as well. The duration's not as good at the moment, so obviously that's not going to be quite as good a stop through potentially, but the stop through nonetheless seemed to show that there is some demand on bonds around about 21.16 from the 10-year auction on the UB contract, and that demand should shape a decent auction for the 30 if we're sitting on a concession against that original bond price. So that's something that I'm aware of as a seller of bonds at 16s. I'm aware that the auction yesterday was relatively successful, and that relative success can simply allow buyers to think about the possibility that this one also may be a success. Things can change, of course, and the the macro storyline, the inflation storyline can change today just by a single soundbite, a little tweet, a little bit of information. All things can change at that point, can't they? Anyway, I'm going to grab some lunch and then we'll get started for the afternoon session. Welcome in, guys.